Holy smokers, guys. What is going on in the stock market? Look at our Robinhood portfolio. We are down 2.22% today. Basically, right now, we've hit the lowest of the low of the day. So, right now, we are not doing great. Because of Robinhood, we can see from 12 a.m., it's just been a straight downfall. So, let me actually show you what I did today. I actually opened up a new position. I'm not going to show you it quite yet. It's right under McDonald's, so I'm not going to scroll down anymore, but I want to show you how our portfolio is doing today. Surprisingly, realty income is up, that's great, but everything else is down. It's big tech, Google reported earnings yesterday and they're actually down 5%. Let me show you my total percent change. We're barely up on Meta and Google now, but this is my total return from every stock. If we actually scroll out, this whole month has been a prank. Look at this. We were almost at 14,000 just a couple days ago, and now we're back close to 13,000. But if you scroll back out to the year-to-date chart, we are still doing pretty good. But I basically want to show you my little complaint about the market. Here's what's kind of crazy. If we look at the Dow Jones Industrial, it's only down 0.83%. That's not that bad of a day, down 0.83%. But look at the NASDAQ. Big tech, it's down 2.86%. And I think it is solely because of the chip sector. And here was my little complaint I made a while ago about the QQQ. If you wanted to invest in the NASDAQ, so let's say you put $100 into the NASDAQ, $8 of that goes straight into NVIDIA. It was actually a little more than NVIDIA. That's because the QQQ is market cap weighted, and that means the stocks with the highest market cap get the biggest allocation. And for a previous time, NVIDIA did hit the biggest market cap in the world, I believe. So at the time, NVIDIA was the largest holding, and I can get behind paying Apple and Microsoft's valuation and their forward PE ratio, but I'm not sure about NVIDIA's. I haven't done, a crazy amount of research. And the thing is, you have NVIDIA and we have Broadcom as well, which is it's not the same thing, but it's basically the same thing. They move very similarly. So really 15% of the entire ETF is just in NVIDIA or the chip sector. And I get that's a bit of a stretch, but I mean, look, AVGO and NVIDIA are down pretty bad today. Oh, and we also have Tesla. No one's shocked by Tesla's big fall. It's actually slightly recovering. It was down like 13 or 14%, but we've had some other surprising moves. What's bad one? Visa is down 4%. They also reported earnings. I didn't look into that too much, but we also have Microsoft down 3%, Apple, and that's kind of the thing. And if we scroll back down here, here's why the Dow Jones Industrials is actually only down 0.8%. That's because we have United Health Group, JPM, Walmart. Those are all doing pretty good. But I want to show you a few stocks that I'm shocked are doing pretty bad. Let me actually show you this. So here are the list of all my stocks. And where is it? It was somewhere around, yes. Here's the stock I want to show you. This is Ulta Beauty stock. They actually hit a new multi-year low, I believe. Look at this. Barely getting below where it was down here. So look at their valuation. Here's what I'm shocked about. And, what's happening with these American names? They have a forward PE ratio of 13.69. That's super cheap. For a cosmetics company that has very good margins. Let me actually show you their EPS. Look at this consistent EPS for Ulta Beauty. This company could easily pay a dividend if they wanted to, pay out some of this net income. I mean, look at the net income they're cranking out. I mean, it's pretty impressive in my opinion. And that's their EPS. Let's go to their free cash flow per share. Now, it might look a little like crazy, but if we look at the one quarter, they have one quarter a year where they really make all their free cash flow. And look at this, it was $23. And if you can average that out between all the quarters, and it's the same or very close to the EPS for a quarter. But look at this, it was up to $23. That was actually the highest amount of free cash flow they've ever had for one quarter. Like the year before, it was 18, and went from 18 to 24. And if we zoom out, they've never had one even similar to that. So they are at an all-time high for that one quarter free cash flow per share. So that's why I'm a little shocked. Ulta Beauty could be a little buy the dip opportunity. This isn't financial advice, not personalized advice. But now I want to show you the stock that I actually bought today. You've probably never heard of this company, but I bought it because I am a customer of them and I actually want exposure to this industry. I don't have any exposure to this industry, and the stock that I actually bought today in my Robinhood portfolio was ticker symbol CEG or Constellation Energy. Now, we are actually a customer of their service. Anyway, check this out. So here in our Robinhood portfolio, I am now a proud shareholder of Constellation Energy. We actually did a pretty good job timing the bottom here today. We're actually up 0.52%, but I actually think I did not get a great valuation. If we zoom out, I did not get a great valuation. I think I got a fair valuation because look at their forward PE ratio. Again, I don't know I haven't done any crazy research on how you value utility stocks. Yeah, this is a utility stock. I don't have any exposure to any utility stocks besides this one now, and they have a forward P/E ratio of 23.85. But let me show you the main reason why I bought this company, and that's because of the amount of stock buybacks that they're doing. So they have a super low dividend yield of 0.78%, which is nothing, less than 1%. But look at the stock buybacks that they're doing. They've bought back. Let me actually show you that the total common share outstanding, you now nearly own 3% more of the company than you did 1 year ago. So you own 3% more of the company, and you get this juicy point, well, not that juicy, but 0.8% dividend yield that I just think they have so much room to grow their dividend. I mean, they're just going to grow this every single year. Like if we look at up here, look at their EPS. I'm on a trailing 12 months basis. They made $7.49 for the entire year. If you look in the middle, their dividend cost $1.41 for the entire year, and they made $7.50 for the entire year. So, and that's assuming no growth. I expect Constellation Energy to grow their EPS, but yeah, I'm really shocked about this. We also have Cloudflare down 4% today, almost at my cost basis. We're still slightly green on our Cloudflare position. This is another company I love. Nearly 10% of all internet traffic in one way or another goes through Cloudflare. I really love this company. And their valuation makes sense. I'll just quickly show you it, just because we're having fun here. Don't forget to drop a like on the video. It really does help me out a lot. But look at their free cash flow per share growth. It's up 97% year over year. So it is true that they really are growing their fundamentals. They're not net income positive yet. So if we look at their net income, they have not been net income positive, but they're growing. Like, look at these year-over-year growth rates. They're getting close to profitability, but they are making free cash flow. Also, let me know in the comments if you guys find any good deals right now. Comment the tickers. I'll give them a quick look. But let me show you how my Mumu portfolio is doing today. We actually are down 1.79%. So it's kind of like what the S&P 500 is doing. But yeah, every stock is down except EOG Resources, which is our one oil stock. But I've been impressed with CubeSmart. We're now up 18% on CubeSmart. We're still down on Nike. I just bought another share of Nike 3 days ago. I might as well share it with you guys. I want to always be completely transparent. I want to show you where I bought every single stock on here. Like if we look at Perion Network down here, we're still down like crazy, over $1,000 on this stock. As you know, once I buy a stock in here, I will never sell it. And if you guys want to help out the channel, check out the Mumu investing app with my affiliate link in the description. I do get, free stocks. I get money basically if you sign up with my code. So I want to disclose that. But look, if you deposit $100, you get 5 free stocks. If you deposit $1,000, you get an extra 10 free stocks on top of that. And this is the best part, FDIC insured, no monthly hidden fees or anything. You get 8.1% APY for 3 months. And then after the 3 months, it goes down to a 5.1% APY. So who doesn't love that? That's what's pretty cool about the Mumu app. They're owned by Webull as well. They're publicly traded. You could invest in Mumu if you wanted to under the ticker FUTU. But yeah, guys, let me know how your portfolio is doing today. I'm pretty shocked to see REITs are doing good. We have the utility sector doing good, ticker symbol VPU. The only utility that's not doing good is the one I just bought, Constellation Energy, which is now, I think, just went negative on my cost basis. Let me actually go check that. I think you can now buy Constellation Energy for below what, yeah, I'm now down 0.34% on my shares. So who knows? This thing could keep falling lower. I don't know if it was a good buy. I guess only time will tell. And I'm holding it for the long run. I really like this one. So yeah, that's all I wanted to share with you guys today. And we have McDonald's here, which is still down. Basically today, it hit my cost basis. Early this morning, it was like down to my cost basis basically. So McDonald's is another one that's at a pretty good deal, I think, at that 21 forward PE ratio. Seems pretty fair for that world-renowned company, Anyway, thank y'all so much for watching. I'll see you on the next video.